Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. There we are. And let's see what we got going on today. As you can see there, the dollar index, a little green, trying to pop up. Well, what's that? That's a 1 minute. Why is that a 1 minute? It should be a 1 day. 1 day right there. There we go. That makes more sense. Trying to head down. We're seeing the same thing over here on Chicago Quant. You can see it's breaking the line pretty comfortably. Same thing here, the way it's driving it down. Let's dismiss that. Well, next thing you know, we'll be back in the 103s again. I did see the bonds are aiming in the upwardly direction. So what happens is that when bond prices rise, interest rates drop. We're getting closer and closer. You know, the March meeting. Here we are, March 1st. The eyes of March. And what will happen is that there'll be some serious, eyes staring at the Federal Reserve. And again, they have been saying, and we've been telling, that it's getting closer. In other words, a 0.25% increase. We're figuring, not a 0.5% increase. And it's the same situation with the indicators that they're following, that the indicators are lagging indicators. They're not leading indicators. And they need to not just try to... It's bad enough that our growth is now showing that Mr. Biden's first year, we went from 6.2% GDP under the previous president down to less than 1% of GDP in one whole year from his policies and concepts and ideas. So, and here we are getting ready to go into this full second year, I guess you could say. And we're going to see that, it's the same situation, that Mr. Biden is not growing the economy whatsoever. He's doing the opposite. He's knocking it down, because he wants to be more like Europe. He's very hungry to be a European. He wants to be a socialist. In nature, the country itself, in nature, he wants it to be a socialist nation. And so that's really pressure on him and his supporters to, stop the growth in America, because we grow pretty powerfully. I'll tell you, I just saw an interesting map out of Tokyo off of Nippon News, and it showed that how was it? I think it showed that they showed how many Chinese restaurants there are in different countries. And in Europe, there are over 13,000 Chinese restaurants, which was a big number, compared to the rest of the world. But then when you looked in the United States, we have 31,000 Chinese restaurants. 31,000, like almost 3 times more than Europe. And we have a smaller population than Europe. So a perfect example of capitalism and growth. In other words, people make money here. We're growing. Matter of fact, I think the GDP of the European Union has been minus to flat to a great extent now over the decade, not just over the last couple of years, but literally over the decade. If it wasn't for Poland and like Slovakia and Latvia and Lithuania, some of the former Eastern Bloc countries, and how much Romania and so forth, Germany and Spain and France and so forth are just not doing it anymore because their policies are geared towards low growth. Low growth, everybody's equal, and when you have high growth, then what happens is that hard workers or lucky workers or whatever make more money and economies grow. And that's not part of the rhythm of what we would refer to as the left in America or the left in the rest of the world. They want lower growth. So anyway, that's what we're watching here in the States. And when you see that low growth at less than 1% here in the United States, it's very disappointing, and it's hard to go to your Chinese restaurant. 31,000 Chinese restaurants in America with a population of 360 million, and I know that the European Union has a population of around 450 million, and there's only 13,100 Chinese restaurants. So, growth. The more growth, and more better pay ends up making opportunity for a lot of people. Anyhow, that's why we're seeing the dollar index do its little red thing right there on J4X. You see it right there. And over on Chicago Quant, the same thing. It's starting to roll over because we're getting towards the end of the interest rate move. And let's just show you how that looks on the, where are we at here? Let's go on to right there. We'll show you the 30-year right there. Where's that? There's a 30-year right there. You can see that. It's trying to perk up a little bit this morning. It's not really making that much of a move, but you can see our math is picking up. The weekly's been in that weekly for a while. The fast all the way back here at the peak. And you can see the slow breaking here into the rest of the slide. And then you can see on the 5-year right there. There's the 5-year note. You see, same situation. It's trying to lift. It's not up much. I mean, it's matter of fact, it's down from yesterday. But in the same action here, it's wideness. You see the fast algo versus the slow, right there. How it where's that zero line? Let's put the zero line in there too. Right there. There we are. So you can see, it's breaking down here on the fast, then a week later, the slow. This is a 5-year note compared to a 30-year note, which means, money is moving in that direction, shorter term. And I think the yield, let me just go double check the yield on a 5%, I think is like 4.25, or let's see, what is it? I'll tell you in a second. Let's see, bonds. There we go. So U.S. bonds, the 5-year is yielding 4.2, and then the 3. No, I'm sorry. Is that right? Yeah, 5 years yielding 4.2. The 3-year is yielding 4.5. The 2-year is yielding 4.8. The 1-year is yielding 5%. The 6-month is yielding 5.13%. And then the 4-month is back into the 4s of 4.9, and the 1 month is yielding the same as the 5-year basically, and that is the no, it's a little bit more, 4.6. So the shorter rates are the ones that are rising. Hey, Metho, they're the ones that are rising out of this whole thing. Let me just show you that right there. There they are, so you can see what I'm looking at. And then the 30-year is yielding 3.9, and the 10-year is yielding 3.9. So, alrighty. How you doing, Metho? Anything on your mind? What are we thinking about today? Huh? So yeah, we're seeing the. You can see there on J4X. You can see here it's come off the 105 down to the 104s pretty quickly. It's starting to make that curve, and again we're. It's interest rates. You give interest rates an opportunity to go up, and they're going to buy dollars. Silver, please. Sure. We switched over to the May contract too in silver. There it is, right there. There's the May. It got into the buy yesterday, and it's looking firmer again today. And again, interest rates. Notice this looks exactly like the interest rate chart. When you go back and look at the, let's see, let's put it right there. It's got that same curve, the whole same thing, topping out. It's because when interest rates go up, it puts more pressure on the metals contracts because they don't pay a dividend. 10-year bond? Yeah, let's take a look at the 10-year bond. Oh, here's the 10-year bond. I'm sure it's lifting also, but here's the 10-year bond. Where's the mouse at? There it is. Here's the 10-year bond right there. You can see it's yielding 3.93 right there, 10-year bond. And then Let's take a look at the 10-year bond on here. There's the March contract. So we've moved the bonds into June also. And you can see it's 10 years trying to lift up the last couple days. It wasn't a sell from here. We probably should throw in the June contract. It's probably more up to date. The volume in the 10-year bond is really low, so this could be really sloppy. And this, I know this needs to be fixed. That's wrong. It went the other way, actually, to be exact. Let me see if we can reload this. Let's do this first. Format. There we are. Okay. And what we're not seeing is this is adjusted here. And I know the 21st needs to be fixed. And I know that for a fact. And I know the 24th needs to be fixed. Those dates are wrong. But as I would assume, it looks just like this. In other words, it's got that slide going on. And it's probably trying to turn up just as much today like everybody else. That's probably the way it goes. Matter of fact, we can do this too. Let's go back to the 10-year and put the June contract in there. And let's put the June contract in there. Format, instrument. There we are. There we go. Instrument. Okay, let's see how that looks. There we are. And we'll see it in a few seconds here. There is, okay, so let's see there. Yeah, that still needs to be fixed also. And that one also, the 24th needs to be fixed. Both of those are wrong. I know that for a fact because I had to fix them on the 30-year and the 5-year. So I would just assume it. Just imagine what the 30-year looks like, and the 5-year. And more than likely, it's trying to turn up just as much today like everybody else. And we'll straighten that out tomorrow for you. Or you know what I can do if you really need to look at it, I can straighten it out now. Let's see. Unless anybody else cares, I guess I can straighten it out right now. Let's see. Was it there? Let's put that back up on the screen so I know what it is. There it is. Let me fix those two dates. The 21st and the 24th. I remember that. It's amazing. And let's see what else. Tomorrow's okay. All right. All right. Well, where should we go now? Since you're the only one asking questions, do you have anywhere else you'd like to look at? Let's go back to that silver. And it would be interesting to see how the metal. You can see silver's acting pretty fair here, and we saw copper turn around. Wonder what platinum's doing. Let's see what platinum's doing. There we are. Platinum went into a buy also this morning. It's trying to lift up. And did it make it yesterday? No. So we went into a buy here, then went back into the sell there, and now we're trying to go back into the buy again. I don't see. It would be nice to see the little dashed blue line get through the zero line. That would be indications that we're seeing some real strength kicking up. Let's just go back to see what this looks like. Yeah, see, same thing. So today's Wednesday. We'll see how the rest of this week plays out. If we get this blue line across the zero line and we start to see the green get inside the manifold, then we know we're going to see some real buying come in again. But right now, it doesn't look that way. Oh, how about natural gas? You're a natural gas player. There's natural gas. You know, it's showing all that strength from last week where the slow algo and the fast algo lifted up nicely. It joined in. It's right up near the zero line, and now they're joining in together. Should be interesting. Maybe we get another pop into the threes or something like that when it comes to natural gas. Now, this is also the May contract. Remember, the front month contract of about a week and a half ago had broken the $2 area. Yeah, I would imagine so with the way you've been averaging. Yeah, and it looks relatively firm here today. And you can see here the daily itself has been holding up very nicely since that low back on the 21st, and we got into the buy right here, and it's been a pretty decent little bounce out of that whole thing. I really thought, I remember warning you about, because of this the cyan or the blue line showing so much strength back there. I thought, wow, that's definitely a warning sign of strength to come. And boy, I was saying to Robin last week about looking at some oil ETFs. You still have some contracts. Yeah, well, it looks like it's trying to get into the weekly buy. So the next pop, you cut whatever you have left over, sell half of that. And then see if they back it off and stay in a weekly buy. Then you could actually buy that sell-off and try to catch another ride up. As long as we're in weekly buys and daily buys, it could be the pop. In other words, maybe they're going to take it to the 350 area in the end. So what they usually do is A, like this would be the A. Where's it? Right there. This would be the A, like that. This right here. Then they'll try to do like a little pop here, give us a challenge in the 240s or 250s area again, and then take out the high and go maybe challenge that right there. What is that? That is 325, maybe, something like that. That's what it looks like, around 325. Wouldn't surprise me if we challenged this area in here somewhere on the upside. Yeah, exactly. Smart move. We call that averaging in and averaging out. That's how we call that. Exactly, in steps. We use the word steps once in a while too. And that's the action there. I just figured, you're interested, we should show it to you. And then from there we can jump back to the currencies and see what the euro is doing. I'm surprised Timothy hasn't popped in yet. Let's see. It's a never-ending up and down. Yes, that's what markets do. You got buyers and sellers, and then buyers and sellers, and buyers and sellers, and and one side dominates versus the other. It's almost like a philosophical thing on the trading floor and in trading in general in the hedge funds about the idea of there's a rhythm of buying and selling, buying and selling. That's what our math does. It keeps you honest. It makes you on the buy side when they are buying, and it identifies it. Basically, it identifies supply and demand, supply and demand, supply and demand. It's over and over. It really should be oversupply and under demand and over demand. So oversupply and over demand, because that's what it really comes down to. Is that our math shows, like it started screaming right here. You can see at this low, whereas it didn't do that. Notice when we scrunch this up a little bit, to look back and past. Notice it goes into a sell, especially on the weekly, and it won't even get through the manifold until like in here, and then finally, let's put the zero line where it belongs. There's the zero line, right? And so you can see the fast algorithm gets through the manifold, and we start to build a plateau right here. And when you see that plateau develop, and you can see we're above the manifold, the negative manifold, these manifold lines And then what happens is that you notice that the slow starts to catch up and starts to join in, and then we get the low right there where the spot month drops under $2. We went to what, 196, 198, 188, I don't know, something like that. And so then what happens is that you can see here the math is picking up the demand. It's telling you that there's more demand out there now, and it's lifting up, and it does it by telling you it's through the time manifold right here, and at the same time it's starting to break the zero line literally on the day that it makes that low. I mean, we can put a line in there for you to be able to identify it. We'll make it like a yellow line, like a warning. Warning, Will Robinson. Warning, 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 warning. And there you can see it. There's the low. And what is it doing? It's almost pierced. You can see, since it's a weekly, it's not going to show it so clearly, but it's right on the edge. But by the next day, you can see right here, right in that spot right there, it's through the zero line, and at the same time, the slow algorithm is picked up too through the manifold. That's why we've had this big giant circle there now for the 2 weeks. So we move that over more. And then now we're right on the edge because both of them are above the zero line. So it's that constant game of supply and demand, and that's what the math really does. It picks up the action and tells us when the demand is picking up, and it tells us when it's oversupply and when the demand is diminishing. They say gas will go expensive because online will open. Wait a minute. We'll go. Let's try this again. They say the gas will go expensive because China will open, but I sell in steps. Yeah, no, I totally agree. And that's what the math tries to do. It tries to tell you where the steps are. That's exactly what it does. It's very rare for us to talk about supply and demand too. I mean, we I call it saber tooth, like a saw blade, or weakness and strength or trend. But I think that could be the title today: is the supply and demand algorithm. That's really what we're at. That's what we follow. We've talked about it very little over the decade, but every so often someone asks a question like yourself, or just points out a fact like you did. You're pointing out a fact, and it gives me an opportunity to expand on the concept itself. Yeah, I'm not sure about China with their open and unopen and blah 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 and so forth. I understand that. What did I hear about China? The growth, they don't see the growth there as much as they're opening up their GDP, which again, you can't trust the GDP because they have a fixed currency. Imagine if the currency was 14, then their GDP could be literally almost zero. So we don't really know what their real growth is. All we know is how much money they take in. That's all we can see. They're taking in, they have over $527 billion worth of trade with the United States. And over $360 billion is like to them, and only like $150 billion is to us. So out of that 500 and change. So it's very hard to say how, as far as I can tell, their economy really is only like the size of, it's like, I want to say it's probably about the size of Japan. Because remember, their currency is fixed. And so because their currency has been fixed for so long in the 6s and 7s, it's like the old ruble of the Soviet Union. You really don't know what the value of their assets are because no one, let's put it this way, if their currency was floating, I would have to believe it would be 13 or 14 or 17 or something like that. I mean, look at the ruble. The ruble's in the 70s. So even if it's a quarter of the ruble, that would put it in the, what would it be, about 17 won to the dollar, something like that. What's 4 times 7? That's 28. It could be as much as, it could be 20 won to the dollar, not 7. which would be 3 times smaller an economy, 3 times smaller, which would put it in the size of, Germany or Japan or something like that. You know, and that would make sense to me because I don't really see the productivity out of it as much as, all I see is, fixed numbers and they're not real. Maybe they are building new pipelines. Oh, I'm sure of it. I mean, what country in the world besides China gets that much money from the United States? $350 billion is a lot of money, and it's a command and control economy. With a command and control economy, the government decides where the money goes. So yeah, it wouldn't surprise me if they're building pipelines, and I understand they open up one coal-fired electric power plant every week. So yeah, that shows you that they're undersupplied when it comes to electricity and power and so forth, and production. So how can the economy be so strong? I mean, how many new plants have been opened once a week in Europe or in Africa? They're not. They open them up like, once a month or once half a year, every 5 months or 6 months. In China, they're opening them up once a week. So it just shows you how small the economy really is. It's not capable of handling the production level. And, it's an interesting concept, but it's an interesting conversation always, because it always surprises me when you really look at it. The second largest economy in the world is the European Union. It's got about 21 trillion. And so, no one really talks about it that way, but they have a currency, and it floats, and it's the second most active currency in the world. And, China doesn't really have a currency. They have some type of fixed exchange rate that's been fixed for decades now. So it's just a fact. These are facts, not anger or dislike or like. It's just numbers. That's all they are, really. Facts and numbers. Anyhow, that's where we are, and wouldn't surprise me. I bet they're building gas lines. When you're building one coal-fired electric power plant a week, opening them up a week, opening one up every week, that says a lot about an economy. It says a hell of a lot. All right. Let's jump from there back to the currencies. Well, we were talking currencies. Now let's look at them. And let's look at the second largest economy in the world right there. And that is the European Union right there. And you can see the currency is in a buy for the last 3 days. The weekly is trying to turn up. You can see the fast moving algorithm right there, moving its way up again. Maybe we should make this a little bit darker. Let's go like that. There we are. Save workspace as. There we go. And so you can see there, it's trying to turn up also. It'd be interesting to see where we are on Friday with the slow-moving algo. But with a move like that today, it could really start to perk it up pretty aggressively. All right. From there, let's put it up on J4X too and show you what's going on with the euro. Again, the second largest economy in the world. 21 trillion. I think China claims to be 14 trillion or 15 trillion, something like that. But again, they don't have a floating currency, so it's really hard to say. Where's the euro at? There's the euro right there. All right. From there, we'll slide over to the cable. Put the cable up on Chicago Quant. And right there. And right there. And you can see there, it's doing the same thing. It's showing some strength in there. And pretty much we talked about this for weeks now, how both the euro and the cable looked like they were building more of a plateau than they were doing anything else. All And so you can see here, and at the same time, where's that zero line? Let's move it back up to there. You can see we're trying to get back into the weekly buy. You can see that the cyan, not the cyan, yeah, the cyan there, the little blue dashed line is trying to get through the zero line. Now we just need to see the slow algo get up through the manifold here to really, see some real kick on the upside. And I imagine once they see a 0.25% increase, that'll be helpful. In the United States, not a half a point, because some money, 27% of I guess people they poll, fund managers, have been saying that they thought that that's what they were going to see, a 0.5%. That's over a quarter of the community is thinking that's what they're going to do. And there is the cable up on J4X. You see the same thing. It's trying to lift up. And then from there, let's drive over to the Swiss. Right there. You see Swiss is still marching up, which is kind of surprising. I can't wait to see what it looks like over here. I'm a little surprised that it's moving in the opposite direction of, there we go. Now it's straightening out. It should be joining in. So it's trying to get into, it's below the zero line on the daily. And let's move that zero line there for the weekly. These guys haven't rolled over yet. But again, if we see a couple days of this action, we'll get that out of there too. And let's put that line. I'm going to throw that in here solely because there's a good chance that tomorrow we'll be in the sell. Let's save that. There we are. And so then from there, and I'm happy to see that. And we should be seeing, I'd imagine with the Hinky Ashkies, they'll start to turn in the next couple hours. And you can see already the slow and fast stochastic are joining in. They've been that way for a couple days. They've been trying to do. Matter of fact, notice it's got the same. Let's do this. It's got that same characteristic, the down, up a little bit, and down again. And we're seeing that same thing on Chicago Quant. Down, up a little bit, and down. So then from there, the yen. I understand Tokyo is closed today. It's a holiday, and you see the action's the same action too. And these two love to match each other, the Swiss and the yen. They seem to march together anymore. And there it is right there. Now we've got a red already kicking out in there. And you can see that pressure there on the daily. And you can see here, where's that zero line? And there's the zero line. Both still showing lots of strength above the manifold. And, we'll watch and see how they play that out over the next 2 days. Today's what? Happy to Hump Day, Wednesday, right? So we could, we got a whole day today that closes there, and tomorrow if they're down in there, you're going to start to see some pressure on the blue cyan, and then from the blue cyan, we'll start to see the old algorithm itself break down, and we'll start to see some weakness there. All right, and we'll put a little red line in there too, like that. We'll just move that over tomorrow. Save workspace. There we are. Now from there we're going to go to Turkish lira. And you can see Turkish lira is 3 days now in a buy. Some wild spike there. Let's just double check it with. Isn't that right? There. Yeah, they have the same wild spikes going on. So there's some illiquidity situations going on there in Turkey. Maybe the relief money and the charity that was kicking in is not kicking in anymore. Maybe that's a possibility. That could be a strong possibility. So it has been a lot of money's been pouring into Turkey. So, what else we got going on here? I guess we could say that that's the nature of those currencies at the moment. Now, what we'll do is we'll drift over to the Canadian, and there's the Canadian, and it is down today, so that's cool. Uh, Oil has been rallying, and the Canadian has been not really reflecting that. And let's just take a look at crude oil here, right there. And you can see it's been rallying. It came off of the 74-ish, 73 and a half area, and ran all the way up to even to today's high of 77, 74. So it was a $4 move. And Canadian, as you see right here, Canadian has been kind of stumbling away up when it should have been heading down, and now today it's finally joining in. So we'll see if now we see oil today selling off. So it's like there's a little less cooperation. In other words, they're not working together like they had been doing before. And then we go over to the we've seen oil, and let's put over here now. Let's put gold over here on J4 axis and look at the South African rand. Where is it? It's around here somewhere. Where's gold at? They're the stock indices. Why am I don't see it? There is a Bitcoin. There's a German Bund. There's that energy company that I follow out of Spain. Something seems to have changed with this combination here. Maybe it's up higher. There it is, right there. There's gold. And so you can see gold because of the interest rates dropping, and as we saw silver lifting up, we're seeing also gold up, like $15-20 from yesterday. Now, at the same time, let's put South African rand up there. And there's the rand, and the rand is rolling over, with the gold heading down again. And maybe it'll come back down to this area here. Maybe we'll get a rally in the metals. It would be nice to see that. See what it looks like over on Chicago Quant, so we can really dissect this action. Oh, notice this too. This is interesting. Right here on the zero line, we've got the fast-moving algo breaking down on the weekly too, and you can see this is definitely pushed into the sell. So let's put the little red line there. There we are, and let's save that. And then let's go take a quick look at was it the gold? Let's take a look at gold. And there it is right there. And you can see let's fix that style. Maybe we can make that more identified now that we have a better idea how it works. You can see here, it's broken through. It was look at that. It was underneath when it went minus. It was underneath here showing the total weakness. And the moment it broke through the slow moving algorithm of the green line, you see it tried to start turning right there, and then it rolled over again. But now it's getting to the manifold itself, and we're turning up at the same time right there. It's turning up the same way. And so let's see, where's that? There's so that's the end of this week. So we're starting to see some strength kick into there again, and it's getting up to this top already, trying to get up to the 1850s. We're at 1845.30. This is the April gold contract. And this, if we start to see the green line start to make a move towards that, and as we saw with the platinum is trying to lift up, but not yet. But they are trying to lift that up too. We're starting to see the metals start to pick up. All right. From there, we slide over to the Mexican peso. Let's see what's that up to. Right there. Still making new lows. That's only a more that's positive for the world. When the Mexican peso is making money against the dollar, like it is now, it's less pesos to the dollar. It's usually a sign that the American economy is starting to pick up again. Things are looking better here in the States. So we'll keep an eye on that. I find that to be very interesting all the time that way. And that's like 3-year lows there. Let's see what we have up on J4X. Right there. Yeah, see there's 22. That is May of 22. There is June of 21. Yeah, see we're challenging like there is basically the COVID situation. So we're making challenges now to 2019, where American economy was roaring, just roaring under Mr. Trump. Then the COVID situation. Now it's been proven, here in the States that it came from China, and Mr. Trump tried to tell us that. No one wanted to listen, and it came from Wuhan, and it was engineered. And there's going to be some investigations going on over that, because you can't let the world, a country, help kill millions of people and not at least have them take responsibility for it. You don't have to go to war; just make them be responsible. Pay for the damages. Then they won't do stupid things like that again. And so you can see here, and then it, under Mr. Trump, they really got things going again, and the economy took off. Remember the V bottom that we talked about here, and then Mr. Biden came in, and you can see that Mexican peso was roaring up, and now with it roaring down, it tells us that something's going on. The Republicans took control of the House, so they can't spend money like it's water anymore. And that's what that's all about. That's why I say the Mexican peso tells me if good things are happening to the United States. And it's telling us it's trying, that's for sure. It is definitely trying. All right, from there, we'll slide over to, unless someone wants to see something else, just let us know. But let's go over to the rest of the metals. Let's see what copper's doing. Well, we saw silver, for those that may have not seen that earlier. You can see silver, that needs to be fixed. I'm not sure what that red dot is all about, because it wasn't there before. And you can see the fast-moving algorithm is taking off. So we're on a second day now in a buy. And it would be nice to see that get through the line. Interest rates, as if anybody had not heard before, it looks like interest rates are kind of finishing off here in the States on the increase. We may only have 1 or 2 more 0.25% increases at most. We are over the 5% area, and you can see that the backwardization, or the contango, back months are only trading in the 3s, 3.9, 4 even, stuff like that. And it's only the 1 year and less that's trading in the 5% plus area. So that's a clear sign that money sees that we're getting to the end of the raising of interest rates. And probably, you can see it when we're looking at the stock market here. You can see that the S&P 500 right here. Let's tighten this up a little bit. You can see here they're not going after the October lows in the S&P 500 or the NASDAQ. Well, why don't we'll hold off the other stock indices, and we'll just leave that with this one, and then we can come back after we look at the others. Hey, Timothy, there you are. All right, let's do this. Slide into position, going into weapons envelope, and let's put Timothy's product up in there. Where's it at? It's right here. It is right there. Where's that mouse at? Right there. There we are. And we'll what we'll do is we'll make a copy of that. Copy. And that is what? The 15-minute, right? That's the 15-minute. We'll give you a look of the 2 right there. So there's the 1 minute, And there is the 15-minute right there. You see it's been in a buy now from right here. So it went into the buy there and had a nice little push on the upside there. And they're doing a little testing here, but nothing major. And we'll see how that moves. And when we look at the cable itself, the cable has been moving up nicely. Timothy says, I'm thinking of selling, but not quite sure there's a contradicting signal on my end. Huh. You can see here that the 1 minute is acting very strong in there. Now let's do this. We'll shrink it down to there, and we'll leave the 15-minute up for you. Let's see. Let's go like this, and we'll go right. I guess we'll go like right there. And then we'll paste it like so. There it is. And then we'll disconnect it like so. Right there. And then we'll shrink it down and move it over like so. There we are. So you can see it while we look at when we look at the rest of the products. There we are. And we'll raise it up. There we are, Timothy. And that's where we're at. Okay, now, brown cow. Let's do this. Let's take a look at. We finished off the. Oh, let's take a look at copper. Let's see what copper's up to. Right there. There's the May contract. You can see moving up for a second day, going after the highs here again. That's what Metho was talking about. The idea that they see the Chinese economy picking up, hoping that it'll help prop up the world economy. I doubt it, but hope is eternal. From there, what else can we say about this action here in copper? Just that's what I think. Was it Metho 2000 was saying that they're seeing more, hoping that the Chinese open economy will help the world economy. So copper usually lifts when there's hope for the Chinese economy to do something like that. Then we went and looked at platinum before just to get a general idea. There's the April contract. You can see it's trying to turn up, but it's got a lot of work to do on the weekly. But the daily is jumping into the buy. You can see that right there. And then palladium. We got a client now that's been staring at palladium. So, I mean, that product is interesting. It came down from 2,000 to 1,400. That's very fascinating. And so, at this point, you can see we went into a buy yesterday there. Right there. Put the little green line in there. And you can see here, let's save that. Save workspace. You can see the weekly is still hanging underneath. We need to see this dashed line get back to the zero line. Do something. Get through the manifold. Show us that there's some real buyers there. And it's been a fascinating thing. There's the 1,366. And let me just show you. This thing came down from, let's scrunch it up. This thing came down from 2,000. Back in, better than 2,000, back in November of last year. So you're talking 4 months now. This product went into a weekly sell. Back there, went into a weekly sell. I'm not sure why it's not filled in back in here. But it went to a weekly sell off that top. And then went into a buy here. I'm not sure why the line's not there either. Goes into a buy there. Let's see, like so. And then, I guess there's the sell. Okay, there's the 2,000 there. Okay, and went into the weekly sell. It's just showing it to you. It's how it broke down in there. We'll make it go all the way to the top on this. And it's a heck of a move, to watch palladium just do that from the 2,000 area down to 600-point drop. That's a powerful drop. Very powerful drop. Very, very powerful drop. And let's save that. Save workspace. And save workspace as. There we go. Alrighty. But that is something. What a big drop. Wonder if this, now that we have a client actually watching Palladium, it'll be interesting to learn from that. To see, over 4 months, it's only been in a weekly buy once, from 2,000 down to 1366. So it'll be interesting to see if it has the same role and characteristic as the platinum does, where it kind of leads the metals market, silver and gold. So that's where we are with the metals complex. Anybody want to see any of the metals again real quick? Just put what one you want to look. If you want to see silver or gold or platinum or palladium or copper up on the chat line, and we'll go there. If not, we'll just march along into the energy sector and take a look at that. And you can see here, Timothy, your product is still in the buy from here. Let's put a cute little line in there. Where's that cute little line? Let's go like that. Went into the buy right there. So it's been a nice little pop. Nothing too wild, but just a nice little intraday pop for you to trade. This is a 15-minute chart that Timothy from Kenya is watching. All right. Now, from the metals, we go over to the energies. And there is the front month crude, which is down a little bit from, actually it's down almost $1 from the highs today. 77.74, trading at 76.43, $1.30. That's pretty wild. Now let's put, where's it at? Right here. Let's put it over here on, let's put Brent up there. What's up with this? Why are we not, let's see, go like this. Where's Brent? Something seems really weird today about all this. It's like as if the products have shifted their position. There's Brent now. How did Brent get down to there? Anyway, there's Brent. You can see it's trying to perk up at the moment. You can see our work is breaking. If we turn off the hinky ash keys, you see it's a little bit lower. And then you can see the West Texas Intermediate. Good guess where that's going to be. There it is right there. Okay, you can see that 76.45. And it's trying to perk up too. And then we turn off the hinky ash key. You'll see it minus. It's red right there. And then from there we see, you can see the green line trying to curve. And you see the same thing going on here. That's just going sideways at the moment. It'll catch up in a couple hours. And you can see our work already rolling over and playing with that sell there. Now that's trading at 76.47. They were trading at parity the back month. They'd gone from 60 cents to unchanged. So that's 76.47, and it's back again to having a premium in the contango, 76.64. So that's about, what's that, 17 cents, 18 cents in the premium of the back month now. And that's what that's up to at this point. And so then from there, we were looking at the natural gas for Metho, because Metho is an active natural gas trader. And let's put that up on the board. And there's the natural gas. You can see that it's holding firm there. And I guess we need to go like this for a second. Oh, look at that, Timothy. Breaking down here. Let's see if we can contract this without disturbing your chart. There we are. You can see here we've seen a lot of strength here in the natural gas trying to lift up. And you can see our work was starting to turn right there, trying to get through the zero line on the fast algorithm on the weekly. And joined in with the low of the year. Or low of the last 3 years, really, I guess you could say. And now you can see it's all turning up, and we're in a daily buy from there. And so the pressure has been on the upside on natural gas now for almost a week. Then from there we we take a look at it over on J4X. And there it is right there. You see that 2766 lifting up, lots of strength on the J4X. And then what we do is we always go over to try to get a flavor or an idea what's going on in Europe. Wow, Timothy, look at that. They're putting a little pressure on your cable. Let's see, what do we got going on here? And that is this particular chart we put up is a, let's see if we can find it. Everything seems to be moved around this morning. There it is right there. And it's trading in the, no, that's not it. Where is it at? There's gas. So I think it's down further. I saw it right there. There it is. And what this is this is a stock, and it's a Spanish energy company, and it matches natural gas all the time. And so it's been trading in the 26s. Let's see if it's still in the 26s. Yeah, 26s. And when natural gas in Europe is like at $30 a cubic foot, this is trading at like $30. And when natural gas is down to $22 a cubic foot, this slides down to $22 or 22 in whatever. I guess it might be euros at this point. And so that's how that works. And so we watched that particular energy company to get a flavor of what's going on. So now I don't think there's any news coming out now, like we've had in the last couple of days on the last few minutes of the webinar. So we're going to cut out, but I think we have a couple major math things coming out. Unemployment on Friday, because here we are in a new month. I'm trying to think what else is possibly popping out. Can't think what else we're seeing at this point. I think that the ADP could come out tomorrow. I think it comes out, and that might be even before or during the webinar. So that could put some energy into things. They tapped into a fair value sell area after a 1 minute breakout. Still not convinced with the sell. Yeah, I hear you. What do we got? We got 2 minutes to go, right? So we'll wait to the 2 minutes so you can at least see what they're doing. Let's do this. Let's get rid of that, and let's give you this instead. Let's give you the 1 minute, and the you can see here the 1 minute broke down here and went into a sell at the 120.65 area, and it's down to 120.44 now. Now the 15 minute, showed some weakness here with that. Remember, the blue here is the same. It's the fast moving algorithm versus the slow moving algorithm on the green, and the white line is also the slow. And so you can see here they're pressing this down with 1 minute and 52 seconds to go. They're pressing hard on this product to get the 15 minute into the sell, and you can see the 1 minute is still breaking down. It's making more lows here. I guess it's going back to like European. Let's see, where's the European Open? Is like up in here, right? There's your European Open, right around here. So they opened it up, took it up a little bit, and then Europe started selling it off. The U.S. market starts right around here. Look at that. This thing's trying to bang on the 40. That 1 minute was a really good one, huh? What else have we got going on there? I guess that's about it, really. And we have, what is it? We have 1 minute and 6 seconds. If anybody wants to see anything, just shout it out. We'll put it up there. If not, we're going to cut out of here. And we've already got a title for today, and that is supply and demand, because that is one of the more interesting ways of looking at the marketplace itself, Yes, it's basically overbought, oversold. That's what supply and demand, or overbought, oversold. I think that's what we'll call the title of today's market. That's what we talked about in the first half hour, for those that are wondering why we're talking about that. And there we go. We got 19 seconds, and it's trying to bang through that 120.40 area, isn't it? Did it break it? What's the low there now? The low is 120.40.01. Let's see what they do here. And we've got 1 second. There it is. And it's underneath. 120.39. Okay. All right, traders. This is Doc from North America. We will catch you all tomorrow, same time, same channel, and it'll be Thursday. So I mean, wow, the week is moving along. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders.